Hello everyone out there. Today, we're going to talk about an important topic that often holds people back from taking their first steps into the world of investing, starting with little money. Whether you have just a small amount of extra cash or you're living on a tight budget, investing is still possible, and we'll show you how. So, let's get started. Before we dive into the specifics, let's understand why investing is crucial, even with limited funds. Investing allows your money to work for you, generating potential returns and building wealth over time. It's an essential tool for achieving long-term financial goals. Step 1. Set clear financial goals. Ask yourself, what am I investing for? Is it for retirement, buying a house, or funding your dream vacation? Having specific goals will help you stay motivated and focused on your investment journey. Now that we have our goals set, let's talk about budgeting and saving. Every dollar counts when you're starting with little money. But why should you even make a budget? Well, it helps you track your income and expenses, giving you a clear picture of where your money is going. Without a budget, it's easy to overspend and lose control of your finances. There is a more in-depth video on the channel about budgeting and saving, so go check that out after this video. Now that that's out of the way, let's get back. Before you start investing, ensure you have an emergency fund. So, what exactly is an emergency fund? It's a stash of money set aside for unexpected expenses like medical emergencies, car repairs, or sudden job loss. Having an emergency fund ensures you won't need to rely on credit cards or loans when life throws you a curveball. Go to the channel for a deeper video about emergency funds. The next step is to explore low-cost investment options. For starters, consider micro-investing apps. Micro-investing is a method of investing small amounts of money, typically as little as a few dollars at a time. This makes investing accessible to everyone, regardless of their financial situation. The way it works is, they link your bank account or credit card to the app and automatically round up your everyday purchases to the nearest dollar. The spare change is then invested in a diversified portfolio. This means that your investments will be spread across many different stocks. This way it's more reliable. Another great option is robo-advisors. Robo-advisors are automated investment platforms that use algorithms and artificial intelligence to build and manage investment portfolios. They aim to optimize returns while minimizing risk based on your financial goals and risk tolerance. Robo-advisors work by gathering information about your financial situation, goals, and risk tolerance through a questionnaire. The data is then analyzed to create a personalized investment plan tailored to your needs. One of the main advantages of robo-advisors is their accessibility. They cater to investors of all levels, from beginners to seasoned investors. With low minimum investment requirements, you can start with as little as a few $100s. A key feature of robo-advisors is diversification. They invest your money across a wide range of assets, spreading risk and optimizing returns. Additionally, robo-advisors regularly rebalance your portfolio to maintain the desired asset allocation. If you don't need an app or artificial intelligence to invest for you, you can always do it yourself. By opening an account with your bank or in an app, you can choose your own investments and see them rise. It's important to spread your investments. This means that you should not invest all your money in one stock, but rather in many. This way it's much safer and you can even have higher returns. Remember to stay consistent. Investing a little bit every day can get you far. You can even make it so your bank can invest a little bit for you every month. As a new investor, educating yourself is vital. Read books, watch online tutorials, and follow reputable financial experts to enhance your knowledge and make informed decisions. Last but not least, be patient and stay consistent. Remember, investing is a long-term journey. Avoid reacting to short-term market fluctuations, and stick to your investment plan. There you go. A guide on how to start investing with little money. By setting clear goals, budgeting, and exploring low-cost investment options, you can take your first steps towards financial independence. Remember, the sooner you start, the more time your investments have to grow. Thank you all for watching, and if you found this video helpful, please hit the like button and consider subscribing to the channel for more financial tips and advice. Until next time, take care and happy investing.